What does this mean for the market strategy?
Well, it's not just the big Wall Street trades that are sputtering. We've been talking about the arc of the Goldman consumer business for much of the last year, the ambitions that they had, the dreams that they had, and how they've been scaling back because it's not really worked out. Marcus Invest was their Robo-Investing product, the wealth advisory channel for the masses. We know Goldman Sachs is a house that is really known for its prowess in advising the ultra wealthy. This was a way for them to reach out to the little guy, to the retail investor. It's not quite worked out, much like some of their other consumer products. Goldman has been scaling back, and with this deal that they've struck with Betterment, where they transfer over their clients and the assets associated with them, they've really pared back their digital banking strategy, which still remains the key part of that is their Marcus savings account, which they're still committed to, but everything around that has fallen apart.
I guess, what is the point of Marcus if it's not going to be bigger than a savings account? It's interesting, Marcus recently had its first rate cut in anticipation for rate cuts. Do you think that they will still be able to draw a lot of money into Marcus, with the point being to lower Goldman's cost of funding if they don't have things like this Invest product?
That's the important part. What is the end goal of having Marcus? Is it to become a digital banking leader? Which is what they'd set out to do, by the way. After the first few years, they decided they could really go big with it. Big bank, big technology, can be as nimble and can, as a startup, be a disruptor out there. That was the kind of talk you were hearing from Goldman management. For that to happen, you needed a suite of other products. But if your goal is to diversify your source of funding, not just rely on wholesale funding, reduce your funding costs because unsecured borrowing is still very expensive. And when you have a channel like the Marcus savings account, which already has more than 110 billion in deposits, you can understand why Goldman wants to stick with it. It's not part of any coherent consumer strategy anymore, but it is still an important source of funding for the firm.
Just about 30 seconds or so here. Is this a good business? Betterment is still buying it. Of course, Betterment is a big business in this world. Did they gain anything by owning it at Goldman?
The incumbents will tell you, yes, it is a good business. Digital investing shops, especially these robo-advisors, have gained scale. Betterment is one of the largest when it comes to independent digital investment advisors. But you also think of the big shops, the big wealth management players have also moved into this strategy where they have a part of their offerings in these robo-advisory services because people are looking for investing options and looking for it without paying, an arm and a leg. These products, you can get away with 15 basis points, 30 basis points in fees, and have your account managed. That will continue to grow. Maybe not for Goldman, but there are certainly many other players out there who will benefit.
It's like K-shaped investing, either pay 0 fees or 3 and 30.